All right, folks, the first Bank of Canada rate cut happens. What does that mean? And the immigration minister closes one loophole and now opens up another with the whole caregiver program. And May TREB numbers come out. What does all this mean? First, Bank of Canada makes a bold move by dropping rates. Everybody was predicting that it was going to happen either in June and July. Whenever there's a rate cut, it means the economy's in the toilet, okay? Because it needs to be, motivated to get going. And a quarter-point rate cut, although it does help with consumer sentiment that things are at the end of the tightening, it looks like a lot of folks are relieved that we're starting to see some movement on that front. But here's the problem, folks. It's not going to get better until we get through some worse times. Now, first things first, the mortgage qualifying rate doesn't change. So it doesn't allow people to qualify for more mortgage amount with this Bank of Canada rate drop. It's going to impact the retail prime number, coming down from 7.2 to 6.95. All the mortgage qualifying ratios are based off the 5-year fixed rate right now, which still doesn't provide much relief. The fixed rates have not come down yet, and we have to remember that banks are in the business of making money. They're quick to increase rates, very slow to lower them. If anything, they're probably lowering the GIC rates quicker than lowering mortgage rates because they want more spread. So don't hold your breath about seeing a significant reduction in fixed rates. We're still seeing them in that 4.99 range for 5-year money, and it's still not built in yet. Now, what I think might happen is we're going to see an increase in listings, because I think what the rate drop will do is it's going to spur a thought pattern from sellers, that is, that, oh, rates are dropping, there should be more buyers. And you're probably going to see an increase in listings, hoping to get elevated levels on their sales, and that's just not going to happen. As I mentioned earlier, the mortgage qualifying rate hasn't changed. There hasn't been more ease to get mortgage approvals. So we're still going to be stuck in this affordability issue. People won't be able to access more mortgage funds because they're going to be restricted on their approval limits, their approval capacity, their borrowing capacity. So be wary of the fact that this isn't going to create a major run to buy homes as people would think. We're going to need a few more rate reductions. We're going to need a lot more easing, and this just gives people that have a lot of outstanding variable and floating debt a little break. And to put things into perspective, a quarter-point decrease on the line of credits and HELOCs is a savings of about $21 per $100,000 in debt. So it's $21 per month in savings in interest costs per $100,000 in debt. So if you got $500,000 on a line of credit or a variable rate mortgage, you're going to save about $100, $105 in interest cost per month. Okay. Now, the TREB stats came out. They were horrible. Okay. Now everybody's probably saying, well, everybody's waiting for the Bank of Canada to reduce, blah 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 blah, but they were terrible. Like the sales for May came in at 7,013 for the month of May, compared to last year at 8,900, which is a drop of about almost 22%. And month over month, which is the stat I always like drilling down to, TREB doesn't really track month-to-month numbers. Last April, we had more last month we had more sales than May. Like, that doesn't make any sense. In April, we had 7,114. We're down about 100 sales in the month of May compared to last month. That's not good. And we've seen more listings. Listings up to 18,612. It's up 21%, and from last year, and up 1,600 from last month. So the TREB numbers are not looking good. So, you're going to see a lot of realtors telling you now's the time to buy, get into the market, it's a great time to buy, blah, 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 blah. Just be wary, okay? Hang on, manage your debt, make sure that whatever you're approved for is comfortable, is manageable, is something that you can handle, and you're, good to go. But you're going to have choice. With more listings coming on the market, you're going to have incredible choice, and it's in your favor. So financing conditions, inspection conditions, make sure everything works to your favor, and deal with a realtor that's going to give you that ability to negotiate hard and give you that peace of mind that, you know what, this has got to be bulletproof. Everything's got to make sense. So very cautious is what I'm telling you to be in this market as we go through this summer, and let's hope we continue to see a few more drops, but I wouldn't hold your breath. The Canadian dollar did drop after yesterday's Bank of Canada announcement. If that Canadian dollar does continue to drop, what that means is any imports coming into our country is going to be more expensive. And as we go into the fall and winter, where we import a lot of our produce and foods from south of the border, that could spur some inflationary activity on the food side again. So we got to keep an eye on that and make sure that this balancing act works out, because it's going to be an interesting time throughout the next 12 to 18 months as we try to see this Bank of Canada governor navigate through all the minefields of data and content and stats and everything else that the government's going to throw at it with all their spending as they lead up to next October's election. Now, having said that, the Minister of Finance, Mark Miller, this week announced a new program. And we all know that he kind of went after student visas and cut the program down quite a bit. And there's already ramifications with all these international students complaining that they want access to permanent residency and blah, 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 blah. Everything that they were promised, they're being pulled back. And, he went at it pretty good and made a major dent on that cohort of student visas and foreign international students per se. But this week, he came out with a new program, and that is the caregiver program. And what this minister has done is, and announced, is that all caregivers coming in will get permanent residency automatically, okay? And they're going to reduce the language requirements so that it's fair to caregivers coming in here. Now, this is a concern to me. It's a real concern, because the whole student visa program created all these strip mall diploma mills that were kind of backdoor processes to get your permanent resident card. And I believe that this is now the new loophole that folks are going to utilize to get their permanent residence. They're going to come in claiming that they want to be a caregiver. They're not going to have the proper language requirements, and they're going to be dealing with the most vulnerable in our society: seniors, people that are rehabilitating, people that are coming off of surgeries and need to be cared for back to good health. And this is something that I think is bad policy, very bad policy. And I'm concerned that there's a lack of a vetting process to determine if in fact these people are sincere to stay in that industry, in the caregiving industry. Because once you provide a permanent residency, what type of handcuffs do they have to that industry? Can they get their permanent residency and then leave and go into something else if they find something that is more appealing? And this is something that no one's really asking. And I'm troubled by the fact that we do have a significant housing issue And if you're bringing these folks in under the assumption that, well, they could be live-ins to the most vulnerable in society, that's a red flag. And the language issue could create a further problem with our most vulnerable not being able to communicate properly when they're in a vulnerable state. So, folks, we got to ask more questions. We got to make sure that this government isn't jamming through a whole bunch of programs to help them with their new voter base that they're dying to get because they are so far back in the polls. Like, this doesn't make any sense. And I think we're going to have to drill down into understanding what exactly is this program going to do as far as numbers, what strings are attached to these permanent resident statuses that they're granting automatically upon coming into the country, and why is it being done so soon after they've cut the international student segment. So I'm a little bit concerned about that. But, you know, this is what we're dealing with. And, you know, on the housing front, we're still short a significant amount of homes. We're getting stats that we're behind on building permits being issued in major centers. And I think we're on track for this year to build about 200,000 homes across the country. A far cry from the 550 to 575,000 that are needed to meet the 3.7 million homes required by 2030 that the federal government is on record of claiming they're going to be building over the next few years. Now, interesting development from the Housing Accelerator Fund. Just recently, the town of Oakville voted to return the money that the Minister of Housing, Sean Fraser, had assigned them under the Housing Accelerator Fund. And this Housing Accelerator Fund was federal monies being sent to the municipalities to encourage them to change the bylaws and zoning to increase density near transit hubs and in communities and so forth. Well, the town of Oakville voted that they don't want higher density. So they're returning the money back to the federal government and saying, we don't want to participate in this. NIMBYism, not falling for this, you know, photo op and sound bite by this federal government. And it just goes to show that all this hoopla about building more homes is not going to happen. We're hearing that developers are not necessarily selling a lot of homes. We're seeing that developers are stopping projects. And the reality is things are not ripe for folks to build in this environment. So we're going to continue to see a bumpy road over the next 12 to 18 months on the home ownership, the home building side, and it's going to get tighter. So, folks, I wouldn't believe any of the BS that the government at all levels is trying to tell everybody out there, and you know, we'll see what happens. But in any event, I want to encourage everybody to subscribe to my YouTube channel for our podcasts. This week, as I mentioned, I got an old friend, Al Sinclair, a little bit of a reunion from the hot property days on CP24 that we shared the panel for, in Al's case, over a decade. I was there 19 years. And we talk a little bit about some of those times and what we learned from that whole experience. But please tune in. I want to thank everybody for tuning in on this episode. I want to wish everybody a great weekend. Enjoy, and enjoy the weather. We'll see you next week.